Hey everyone, welcome back to Corporate Decoder, the place where we turn confusing corporate filings into crystal clear insights. Today, we're going to look at a company that is making a big move. And let's just say things might be getting a little more interesting on the stock exchange. Stick around to find out what that really means. Are you ready to understand what happens when a company changes its trading game? We're diving into a filing that shows a shift in how Zoomcar Holdings Incorporated is playing in the public market. Before we dive into the nitty-gritty, if you love getting these actionable insights without the corporate jargon, make sure you are subscribed. And hey, we've built an awesome community on Discord to chat all things business and finance, so check that link in the description below. Alright, let's get to it. We're looking at a filing from Zoomcar Holdings Incorporated. Now, this isn't your typical deep dive into their latest financial results, but it is about a significant operational change. Think of it as a company adjusting its stage presence. This filing is a current report, a Form 8K, which means it is for really important stuff that happens outside of the regular schedule. And what happened here is that Zoomcar Holdings Incorporated decided to move their stock trading spot. So here is the main story. On the 4th of November of 2025, Zoomcar moved its ordinary shares to a different trading platform called the OTCQB. You might know their previous platform, OTCQX. Moving from OTCQX to OTCQB might sound technical, but it has real implications for how easily investors can buy and sell the stock and the level of scrutiny the company is under. OTCQX is generally for more established companies with higher standards, while OTCQB is for developing companies. It is like moving from a premium lounge to a more accessible seating area. This didn't just happen out of the blue. Back in August of 2025, Zoomcar was told by OTC Markets Group that they weren't meeting the requirements to stay on the OTCQX anymore. Now, instead of trying to fight it or fix it to get back to their old spot, they decided to proactively move to a different tier, the OTCQB. This shows a really pragmatic approach. They recognized they didn't fit the top tier anymore, and they made a quick decision to adjust. So, they looked at their options and chose the OTCQB. What does this mean in plain English? Well, companies that trade on OTCQB still have to meet certain filings and reporting requirements, but the bar is generally lower than OTCQX. Investors should pay attention, because this could signal some challenges or a different stage of growth for Zoomcar. It doesn't stop people from trading its stock in the United States, but it does change the perception and potentially reduces the visibility on the more premium OTCQX market. Now, the company wants to make it clear that this switch doesn't mean they're stopping their regular reporting to the US Securities and Exchange Commission or SEC. They still have to file their reports, and their stock can still be traded here. So it is not like they've disappeared from the scene, they've just moved to a different part of the market now. Let's look at the bigger picture for Zoomcar Holdings Incorporated. This move to the OTCQB tier usually implies a company might be going through a transitional phase. It could be about managing costs, focusing on operational improvements, or perhaps preparing for a different kind of future. We don't have detailed financials in this specific filing, which is typical for a Form 8. That is announcing a significant event like a trading tier change, but the fact that they had to leave OTCQX suggests some underlying issues. We want to see companies on the highest tier possible because it usually means they've met stringent financial and corporate governance standards. Moving down can sometimes be a red flag for investors, making them wonder about the company's financial health or operational stability. The big question here is why they no longer meet the OTCQX requirements. Was it a financial performance issue, a governance problem, or something else entirely? Without more information in this particular filing, it's hard to say for sure, but the change to OTCQB while maintaining us trading means they are opting for a market that is more accessible for developing companies. This could be a strategic choice to reduce compliance burdens while they focus on growing their core business. However, it also means they might receive less attention from institutional investors who often prefer the higher visibility and perceived stability of the OTCQX market. For investors, this is a signal to do more homework. You'll want to look at their most recent financial reports, like their 10Q filings, to understand their revenue, profitability, and debt levels. You'll also want to keep an eye on any future announcements. Did they plan this as a temporary move, or is this a new long-term strategy? The ticker symbol ZSCAR will now be associated with this new platform, and it's important to understand what that means for the liquidity and the overall investment appeal of the stock. Looking at the overall direction and risks, a move like this can definitely be a risk. It might signal that the company is facing challenges that are preventing it from meeting the stricter standards of the OTCQX. This could deter some investors and make it harder to raise capital in the future. On the other hand, it could be a calculated move to simplify their operations and focus on what they do best. The opportunity is that it might free up resources that can be used to boost their business. The key will be how successfully they can navigate this new tier, and whether they can demonstrate strong performance that eventually allows them to move back to a higher tier, or even get listed on a major exchange. In conclusion, Zoomcar Holdings Incorporated has made a significant adjustment in its public trading presence by moving to the OTCQB. While this doesn't halt trading, it does signal a shift that investors should pay close attention to. It is a move that warrants further investigation into the company's underlying financials and strategic direction to understand its true implications. Alright, that is our breakdown of Zoomcar's latest update. What is your take on this move to the OTCQB? Do you see it as a strategic step or a cause for concern? Drop your thoughts in the comments below. If this quick decode was helpful, please hit that like button and subscribe for more straightforward analysis. And don't forget to join our growing Discord community linked in the description. Thanks for watching. See you next time.